address the earnings from Godrej Consumer. Shah, the CFO, joins in on the show right now. Sameer, hi, morning. Your volumes have declined for a third consecutive quarter this time. When is it that you expect a meaningful comeback in volumes?
I think there are a couple of things. One is if you analyze the volumes performance in last quarter, it's little better off than what the overall volumes have been for the sector. So if you look at FMCG sector and within FMCG, the non-foods part of the business where we have a big play, the overall volumes at sector have dipped by around 7-8%. We had 5% decline. So read with that 7-8% decline, we feel our performance is largely in line. I think in terms of going ahead, we do expect a recovery in volumes. We do expect a gradual recovery in rural. We are seeing inflation even at consumers level now, kind of cooling off partly. So that should result in uptick, especially in rural consumption, which in turn should result in overall volumes recovery.
Sure. So will this year be a pricing-led kind of growth, and will there be more price hikes, or have you already passed on much of the raw material increase so far?
I think at this point in time, there won't be any incremental price increases because the commodity prices also have cooled off over last couple of months. So the growth will be more of volume driven. There will be carry forward pricing for rest of the year or maybe for next couple of quarters.
Now that the palm oil prices have corrected, you've also passed on some of the pricing. How do you see the overall margin recovery then?
Well, I think no guidance on margins, but for sure the gross margins will go back to its normative levels. And by normative levels, I mean to the levels of FY20 and 21. There will be upfront marketing investments also, something which we have seen over last few quarters. And we believe that this marketing investments will result in a better growth. We will also have a very tight watch on the controllable cost or the cost saving programs. I think aggregate of all of them should result in margin expansion going ahead. My sense is even in second half of the year, we will see profitable growths. And by profitable growth, what I mean is sales, which will see correspondingly margins increase also.
Rural accounts for nearly 30% of the sales. So what is the urban versus rural, and can you quantify that for us?
So I think if you look at last quarter, the rural growth was down by maybe 200-300 basis points as compared to urban. And by urban, I am also including the alternate channels, which is more to do with cities as well as maybe tier 1, tier 2, cities. So that's how, I mean, the overall performance has been between rural and urban. Historically, I mean, at category level, but more so for us, the rural growth have been 1.3x to 1.5x of urban. And say in last quarter or for last couple of quarters, the growth has been around 0.8x, 0.7x of urban. So if the rural consumption swings, which we do believe in terms of at least a gradual recovery, it should aggregate to overall relatively better volume and value growth performance.
Sameer, morning. So what has been the demand trend, and has the company seen any sort of down trading in any products?
Not much actually, because historically we have seen that we are one of the biggest beneficiaries of down trading because we do have a lot of value packs. For example, in hair colors, we have a sachet of creme at just 15 rupees. Even in terms of soaps, I mean, we are one of the value players in soaps. But this time around, over last year or so, despite high inflation, we haven't seen consumers down trading much. What we have seen is consumers either pausing on the consumption or stretching the consumption. One of the two, which has impacted in a way, say at least rural, consumption. But we haven't seen much of down trading.
The household insecticide segment that was impacted by a seasonal issue, is it only due to seasonality, or has there been an actual slowdown in the industry, and what's the current demand looking like for this segment?
Yeah, I think it's more of a delayed monsoon in key states in the country, and the reason why we say so is because we have seen recovery in October and as we speak in November also. So the hypothesis, at least at the end of the quarter, that the drop in August and September in household insecticides was largely to do with season. We have hold on to our market share, so it's not like we have lost share either. Structurally, we are working on multiple inputs like repositioning of our Goodnight Electrics portfolio. We are also putting in a lot of initiatives in terms of deepening penetration for aerosol formats within household insecticide category, and we will see a couple of new launches over next 4 to 6 months in the category.
Right. Indonesia continues to disappoint with revenues slipping for a third consecutive decline. What has impacted the business and when is it that we can expect a turnaround?
See, Indonesia business optically degrew by around 8%, but we had a very high hygiene base because of the second wave of COVID in Indonesia in Q2 of last year. The hygiene had taken off, and post COVID, it has receded. So, if for a moment we strip out the hygiene comparator from the base, the overall growth will be close to around 10 to 11%. So, the core business performance has been extremely strong. There could be a quarter or so more of base of hygiene, not of this quantum as what we had in the last quarter, but the core business performance should be in positive zone in second half of the year. And even overall, we do expect growth to be in positive zone in Indonesia. That should, complement with falling commodity prices. Our upfront marketing investments will continue, but there also will be a bit of scale leverage which will come in from cost perspective. So net in second half of the year, we expect Indonesia to grow, to be in positive growth zone, and at least conservatively maintain its year-over-year margins, if not expand.
And speaking of innovations, what's been the response when we talk about the new ones, whether it's Magic Body Wash or Airmatic?
So Airmatic has been a mega success for us. We have been doing extremely well, much better off than our internal plans as well as expectations. It's all about, seeding in the new format, which is flying through the roof as we speak, as well as leveraging a distribution network. Body wash, we expected it will have perhaps a similar journey as what we had experienced in powder to liquid hand wash of 6 to 8 months, because it's a change in consumers' behavior. They've never experienced, liquid to liquid, kind of body wash. But we will continue to invest, we'll continue to drive distribution also, and we remain equally confident that the way powder to liquid hand wash eventually turned out to be successful, even liquid to liquid body wash will turn out to be successful, because it's a very disruptive format. And we are not honestly just looking at body wash as a space. We are looking at entire soap category as a space, which is close to $3 billion size. And we expect, a 10 rupee, 15 rupee, 20 rupee soap consumer to convert to this hand wash, body wash format, which is very affordable and comparable to a soap bar price point.